Hey everyone, welcome back. So what does 7 straight week of losses gives you? Well, for me, it gives me 40% loss on my portfolio since the beginning of this year. And some hard to make big decisions about getting guacamole with my Chipotle, or should I skip it for another week? So while we are in this crazy market situation, and doesn't matter where you look, all you see is nothing but slashed price targets and negativity around the block. I mean, from the last, I would say 1 week, I'm getting these alerts day after day about the price target has been slashed from 150 to 110. Price target for X company has been slashed from 80 to 40. I mean, there are some big declines all over the market and all over, I would say, majority of the companies. Doesn't matter what sector you look at. So I decided to change the tune and give you some optimism and also a sneak peek into the future. And here I will mention that the future prediction is by 23 Wall Street analysts, and where do they see S&P 500 by the end of the year. So let's do this. Let's take a look at targets by different analysts, and then I will share a few other details on the overall market conditions. So I'm going to share my screen and we are going to take a look at it one by one about what these analysts are predicting and saying. And then from there, we are going to talk about how to proceed or how I'm proceeding. Again, not a financial advice, just my opinion. The average estimate by 23 analysts that Bloomberg got together and kind of compiled a report, it says 47.43 is the end. We are at flirting almost 3,900. We went down to like 38, and I'm going to show the S&P chart in 1 second. The median is 4,800. The high is 5,350, and the low is 3,900. Number of replies were 23. So the low estimate for the end of the year is 3,900. Okay, these were the analysts that they kind of surveyed right here, and you can see from Bank of America to Barclays to Citigroup to Credit to Deutsche Bank to Goldman Sachs to JP Morgan, Morgan Stanley, all of them are coming out. And if you see the difference over here, for example, JP Morgan 4,900. Okay, right now we are at 3,900, so you can see the difference. And if you see Morgan Stanley, we have 3,900 over here. And if you look at Citigroup, 4,700, Bank of America, 4,500, Barclays, 4,500. So these are all the 2022 end of the year price targets. End of the year is only 6 months away, if you really look at it, right? In 6 months, if we can come back and gain all this, that's going to be really interesting and really, I would say, a welcoming sign for all us investors who have lost so much money. But what does it mean by 4,700, 4,900? Take a look at this. S&P 500 has dropped for 7 straight weeks, longest streak since 2001. So if you are feeling the pain and if you're feeling that your portfolio is nothing but a sea of red, like I'm looking at my portfolio, you are not alone, because this stock market has been the worst since 2001. And most of us did not even know or did not even feel the 2000 crash because we were not in the market at that time. So this is not normal. This has been in the last 22 years or 21 years, this has been the biggest downtime in the market. So of course the sentiment among you and I are going to be less. Of course the sentiment about the whole market is going to be negative. Of course we are feeling the pain, and we are basically feeling that, you know what, it's not even worth being in the stock market. The Teslas, the Apples, the Googles, the Amazon, everything is selling off. Where should you put your money? Better to be just put it in cash, sit on the sidelines, and then wait it out. Very, very normal. So if you look over here, 7 straight weeks of losses. And we are getting close to basically the losses, or one of the biggest losses that we had back in January of 2020. Right here you can see that we had January of 2022 when we had that sell-off big time, when everything was looking all of a sudden too expensive, and we came and we sold it off. And this is looking like January when we had that big sell-off one day when the stock market kind of came and dropped, and that's when we really realized all these companies were really, really richly valued. But we, of course, were in a denial, and we continued, and we had some buying as well in March. But then in the last 7 weeks, all we have seen is intense selling. Now I'm going to share the chart of S&P 500 with everyone right here. Let me just go ahead, go to the index here, and S&P 500. Okay, so this is S&P 500. I'm going to switch to daily chart, and I have some of these drawn from before from my previous videos. Now, on an average, when S&P has dropped, you can see back in 2015, it dropped about 11%, and then it kind of took a flight up. And then after that, back in 2018, right here, it dropped about 20.34%. And this drop right here was a huge drop back in 2018. But the COVID drop we had was 35.48%, around close to that. And if I just go exactly, we are talking about 36% drop. So we are not close to 36% drop, because the drop that we had right now is about 20%. But that 20% drop has put S&P into the bear market. If you look attention over here, we dropped to 3810. And 38.15 was the threshold. And if I switch to, let's say, minute chart here, see 38.10 we dropped on Friday. And then all of a sudden, buyers came in and we pushed it up to about 39.1 right now when I'm recording this video in pre-market. So you see over here, we have this huge momentum that came in S&P 500 and pushed S&P 500 from all-time low. But if you look at the weekly chart, it tells you the exact picture. The weekly chart is still trending down. The MACD is still down. The RSI is in oversold category, but it hasn't reached the 2020 crash that it reached. But I mean, it's not the same as 2020, because 2020, everything or everybody was freaking out. Economy was in a bad shape. Businesses were shutting down and nobody had a clue exactly what's going on with the world. But this time it's not the same. But if you really point out, and if you see in all previous crashes, I have mentioned that in my previous videos, that this is S&P 500 weekly chart. And if you see, every time we have a chart or we have a S&P sell-off, it actually came close to touching the weekly average, S&P 500 and 200-day move, 200-week moving average, and it kind of took a flight up. And we can see over here, it happened the same thing in 2018. In 2020, it went down or under the 200-week moving average. And then if you see over here, we are at 38.15 right here when we touched it. We still have about 8.5 to about 9% to go before we touch the 200-week moving average on S&P 500. And in my opinion, when we touch this, or if we touch this, that'll be the time that I would say that we had hit the bottom where I would be comfortable putting money in. Can we go further down? Absolutely. Nobody can tell, right? I mean, look, we went all the way down from after touching the 200-week moving average in 2020. We still took a plunge of about 17 more percent. I mean, this was massive if you look in 2020. After we went down or under the 200-week moving average. So, and I'm saying that, okay, we are going to go and we have about 8.64 or 9% to go more, but it could be double, it could be 20%. But we have seen time and again that anytime we have touched the 200-week moving average, we have taken a flight, unless if it was a 2008 like a crash or 2020 like a crash, 2 times back when we kind of went below the 200-week moving average. So I personally myself, not a financial advice, I'm comfortable buying, I would say, the big names, the value names over here at this range. And I'm still sitting on the sideline. I'm buying very few stocks right now. And I feel that we could see more pain. But the end of the year price target is what I wanted to share in this video, that they are still saying that we could reach the end of the year price target of about 4,900. The median that I shared with you all is about 4,700. So let's say that we reach that 4,700 price target. Right here is 4,700. I'm going to go exactly 4,700. And if I see where we are right now, that's 20% gain from where we are right now. And if we were to go and touch the 200-week moving average, that's going to be about 26 to 27% gain from the all-time lows if we were to touch the 200-week moving average. So if we do touch the 200-week moving average, and if you're buying the stock at that time, you have a potential of making about 20 to 25% on your investment, which is, I think, going to be beautiful for the market. Now, nobody is saying, people are still estimating that we could see a recession in 2023, we could see the downturn in 2023, but as I have mentioned in my previous videos, that some of it has already been priced into the market. Okay, so one more thing I would like to bring over here, that US economy is still healthy. Yes, but the trend that we are seeing, the credit card data I've shared actually with my Discord members, the credit card trend or the spending trend that we are seeing, the weakness has started to see through the cracks. That means people are using less credit cards than they were 2 months ago. and which is a sign that people are now looking at that should we continue to spend in the same way as we were spending 2 months ago, or do we need to slow down? And with the market sell-off, the rich people or the people with a lot of money have started to reevaluate their spending habits. So they're saying, you know what, no, we're not going to spend money on and luxury or I would say not necessary or not necessary items take the first hit. So if we see that earnings, or not the earnings, but the spending trend change in the coming days, that'll be the first sign that we are going to slow down in the next few months. And market is looking at the data very carefully, and that's why you see these S&P dropping to all-time lows on a week after week basis, because big corporations, big hedge funds, big companies, big banks are still sitting on the sideline because they are seeing this trend and they're like, you know what, the markets or the economy can slow down, and if it slowed down and the inflation remains high, the Fed is going to come out, raise the interest rate more hawkishly, and that's going to drop the markets even further. So that's where the topics or the talks of S&P losing another 8 to 10%, coming to about 3,500, which is my target, where I feel S&P is going to start going up from that range, is really, really important. So I'm watching for that 3,500 number in my mind. And that will be the time for me to feel comfortable to put all my money at work. And trust me, any time when the market drops, like it dropped another 2%, another 3%, it all adds up. And the buying power reduces because, again, you know, some of the options I have, some of the things that I have opened on the margin. I'm not using the margin until I go and use those or execute the trade. But what's available for trading reduces. So I'm looking and watching these very carefully. And when I feel that we have hit 3,500 or we have hit the bottom, again, we're not timing it, we're timing our entry. I will go ahead and sell some of my losers to make money or to have money available to buy some of the companies which I feel will have a potential of giving me about that 20-25% return. So it's going to be very interesting, and this week is going to be super crucial for S&P 500. So definitely watch out for this week and the trends that's going to happen, because this week is going to decide how we are going to go forward for the remaining of the year. Because if we break that number of 2815, we are going further down, or sorry, 3815, not 2815, 3815, we are going to go further down to 3500. And it could happen, I have mentioned in my previous videos that I see the mid of June where we hit that peak bottom. Again, capitulation is not here yet by many analysts, and also what we are seeing in the market in terms of all of a sudden when we hit that 3815, the market took off and took back to like 3900. So this week, today and this week is going to be really critical for S&P 500. Stop watching your favorite stocks for a day, watch S&P, because that's what's going to define what's going to happen at the end of the day. Even though your favorite company may be going up, and if S&P is selling off, then your favorite company is going to come down sooner or later with S&P 500, because it's the market that kind of defines. So I hope I provided some value. And if you like the video like I did today, make sure you comment below and let me know so I can continue doing these kind of videos. And also give this video a like, also subscribe to the channel if you're new, and also if you like the app that I use for charting, Moomoo, link in the description. So definitely take advantage of few free stocks. Thank you so much for joining me. Until next time, you all have a sparkling day.